For more, let's bring in Jeff Kilburg, founder and CEO of KKM Financial and a CNBC contributor. Jeff, it's good to see you today. Talk to me a little bit about where you see the interest rates going in 2025 and what kind of impact you have that playing on the markets.
Well, Contessa, great to be here with you. Happy New Year. And I know my view currently isn't the happiest of New Year's, but I think actually this is going to be quite healthy when you do see the markets potentially reprice on equities. But the leadership, I go back to where I cut my teeth, Contessa. I started the Chicago Board of Trade in those Treasury futures pit, and you look at the 10-year note. Look at just today's session. We can't take too much out of the last session of the year, but we are seeing yields elevate. We're seeing the sell-off of the futures. And what does that mean? I think the 10-year note moved to 5%. That's in contrast to what the Fed wants. Look at the Fed's balance sheet. Despite the fact they've moved their balance sheet below $7 trillion, they still have to service that debt. And that cost on that debt is all tied to interest rates. So I think with the 10-year note moving higher, that's going to be a lag effect on equities. And I think in the bigger picture, Contessa, when you see some of these high-flying, higher-beta names that have sensitivity to interest rates, I think it's welcome to see some type of revaluation in those Mag 7 names, as well as tech names in general.
There's been so much AI euphoria this year for investors. You're looking at one particular name that's not a pure play. This was our chart that we kicked off the exchange with today, but another that could have a real benefit from AI. What is it?
Well, that's Tesla. And it's interesting, you know, I got a lot of lovely remarks on Twitter when I was talking about buying Tesla in 2023, early 2024. But if you think of the data, the AI component, don't look through the lens, Contessa, that's a car company. That's where I think Tesla is going to continue to reward investors. Didn't feel great when I was buying Tesla from 150 all the way down to 110. But here in this moment, I think there's more upside. But it's going to be contingent upon what lens are you looking through. I go back to how we are seeing different AI players scrutinized. Microsoft, for example, Contessa, was highly scrutinized due to the fact of the CapEx, the capital expenditure they were making, the investments they're making in AI. However, on the other side of the pond, we were seeing Facebook, better known as Meta. Meta was making massive expenses in the CapEx for 2024, and that has not been scrutinized. So I think we're going to see some revalue, some rebalancing, because investors in 2025 will want to know what all this capital expenditure, all this AI euphoria, is it actually producing revenue? They're going to want to see revenue and be held accountable. And that's where I think some of the Mag 7s or some of the overstretched AI names have some vulnerability in 2025.
And I know you also have, it's sort of like the Beatitudes of Jeff Kilburg, bring me your poor and downtrodden. You've got the sectors that were the worst in the S&P 500, energy, healthcare, materials. You're seeing some opportunities. And the dog of the Dow, Boeing. Why are you getting into Boeing?
Well, if you remember back after a really rough 2022, I had a nasty of the NASDAQ trade. And one of those names was NVIDIA. And NVIDIA is up about 850%. And I don't think any of the names that I'm presenting right now have that AI flair. But if you look at Boeing, it's been oversold. If you look at some of these sectors that have been beaten up, and right now, Contessa, we don't own these sectors in our sector rotation model. We're waiting, but we're being very selective. So if you look at materials, if you look at energy, if you look at some of these names that have really been beaten up, like a Boeing, I want to own a Boeing. We actually own it in our Essential 40 ETF because we believe Boeing is still essential. Yes, it's been a tremendous amount of headwinds for the company, but we think the essentiality theme will come back into favor when you see some of these large market cap way. We go back to the top 10 names of the S&P 500, nearly at 40%. When you see all these indexed ETFs have to rebalance, that's where some of these stock picking capabilities will come and arise themselves. And I think a Boeing, a Sherwin-Williams, we look at a Lilly, and also a Pfizer, which is at a really rough year in healthcare. Some of these beaten up sectors should present opportunity. It's not going to materialize today on New Year's Eve, may not materialize in January, but I think overall you're going to see such sector dispersion like we saw in 2024 that allows sector opportunities moving forward in the subsequent year.